it can be troublesome or disheartening if you go out trying to raise a lot of money and then, you're only getting 20% of that. Money flows to the highest and best use of capital, right? It will naturally kind of flow to where it will generate the best returns, which is usually the best companies. What you're building or what you're doing is almost secondary to the fact that you've had a track record. Investors love that, right? A lot of times there's the newer funds that don't have as long a track record that can be a better fit because they're hungry and they're looking to build their brand by having some successful startups. So they're going to hustle harder for you, right?
Nathan Beckord, thank you very much for coming to talk to us today. Could you tell us a little bit about who you are and what you do?
Absolutely. Thanks for having me here. I run two startups. I have one called foundersuite.com, which is software and investor database for startups raising capital. And we've been around over 7 years, so we're kind of old school, OG in the space. And then I've got a second startup that is newer, just a couple months old, called Funding Stack. And that is for emerging manager VCs raising a fund, also for smaller investment bankers, fundraising consultants, advisors, helping companies raise capital. So Founder Suite and Funding Stack. And then before that, my background was basically helping companies raise capital, both as through a consultancy here in Silicon Valley for about a decade, and then before that in investment banking in New York and San Francisco. So that's the background.
What attracted you to raising capital? Why did you choose that?
Oh boy, when I was in college, this goes back a while, I was exploring career paths and investment banking sounded really exciting and sexy, right? It just sounded like a dynamic career path, and it definitely is. I mean, it's a good career path for the right people. I didn't actually love working in investment banking because the hours are just brutal, very high stress, but you're doing deals, right? It's a very exciting career path. And getting into investment banking, you kind of go in a couple different paths. You could get into the mergers and acquisitions side of the business. You get into the capital raise side. In my case, it was called private placements group. We were helping later stage companies raise capital, or you can get into the trading and research side, right? The folks that are doing research on public company stocks and making markets of the stocks. So I kind of found my way in the capital raise side, and it is actually very exciting because I feel like I've always had an entrepreneurial uh, DNA, and so in comparison to those other two tracks of trading or M&A, where you're working with later stage stuff, with the capital raise side, you're still working with entrepreneurial companies and growth companies, that are a little later stage. They're raising B rounds, C rounds, mezzanine rounds en route to going public. But you're still working with entrepreneurs. So it was a really good fit. And it's pretty thrilling to get out there and raise millions of dollars for companies. Yeah.
Yeah, there's something that's real when money gets involved. You can have a great idea, but when you ask for money, I interviewed a gentleman that's a Forbes columnist talking about finance from the perspective of financial therapy, like helping people get their finances in order, I suppose, achieve their dreams, etc. And he likens money to energy, which I thought was an apt analogy because there's something,
Mm.
it unlocks so much and it means so much. And you can talk about it in theory, but when I say, can you sign here, all of a sudden the dynamic changes. There's a lot of kind of a primal element, and it's a different type of energy, I suppose, about the whole thing. So do you see that like in your dealings with money?
Yeah, for sure. I mean, money is obviously the currency that makes the world go round. I mean, that's kind of a cliche to say, but um, but it's a benchmark. It's a scorekeeper. It's the grease. It's the lubricant. It's the blood. A lot of different metaphors there, but sure, it's kind of what makes everything else happen, right?
Right.
And one of the things actually, like way back when, and this is in college, right, when you're like examining career paths, what I found fascinating about investment banking and the capital markets is this idea that money flows to the highest and best use of capital, right? It will naturally kind of flow to where it will generate the best returns, which is usually the best companies. Now, of course, that doesn't happen all always in every case, but in general, an efficient market, that's what will happen, right? Money will go to those companies um, that are using it productively, and I found that very kind of that concept very cool, and it's benefiting the world to have money going to its highest and best use. Um, so that was kind of something that attracted me to it. So yeah, for sure.
That's kind of like the market decides whether or not it's a good idea or a bad idea.
Yeah, and the market's not always right, of course, but in general, overall, it does. I think it's an efficient way to allocate capital to where it can do the best.
You've been in the game a while now, it seems. You've seen, I'm sure you have a lot of data to perhaps see a couple of patterns or be able to identify different periods. What's going on right now? Is there as are we similar to another period, or is this a whole new ball game that we're going through on the markets?
Yeah, it's similar. I've been doing this since 90 mid 90s, right? So I got out of school. Things were actually pretty depressed or pretty tough market. And then, pretty quickly the dot com bubble, the dot com number one happened in the late 90s, and you saw, things explode. And I could tell stories and stories and stories, but like I was in San Francisco, and you would go to an open house for a way overpriced apartment, and people would show up with like 2 years cash in advance to get the place, and there'd be 50 people there, right? I mean, it was this boom time for
Seriously.
sure. Very exciting time to be in working in the markets as all these crazy .com startups went public, and then of course fast forward a few years to 2001, 2002, when the whole market collapsed. And then my little anecdote is there was like a 6 month waiting list for U-Hauls going out of San Francisco, right? I mean,
Okay.
just, yeah, everything flipped around in a matter of a couple of years. And then, of course, you had, the buildup, and you had these other wave of startups, the Facebook and LinkedIn and a bunch of others that kind of grew out of that phase, and of course the 98. But so my point is, I've seen multiple waves of kind of boom and bust.
Right.
um it always comes back. Right now we're kind of at the bottom, maybe at the inflection point, maybe not. I think if you have to ask me and I had to give an answer, I think we are kind of at the bottom or an inflection point where things are starting to look up a little bit. I know our business at Founder Suite, where we're serving startups raising capital, is a bit of the canary in the coal mine. And the last couple months, November, December, even January, were actually pretty challenging months. February um, is already showing growth, so that might be one little signal that the markets are kind of returning, bouncing back. And, it's hard to predict this, of course. Like
Mm.
when COVID happened, and the stock market just collapsed, and all this startup funding, we were, investors were predicting the nuclear winter, that it would be 24 months, 36 months until any deals got done. That didn't happen. Things came back like 6 months later, right? So it's hard to predict the future. But I feel like we're kind of, at the bottom, and starting to see some pretty interesting sprouts of shoots of new life in the markets coming up.
Are there any industries or pockets where that new life is growing faster than others?
Well, that's a softball question, but I'll take it. Artificial intelligence, right? It's
Yeah.
unbelievable. You've got all
It
these
touches
other,
everything, right?
yeah, well, it touches everything, and you've got all these other industries that are it's very hard to raise capital in. But now, if you're a legitimate, and there are there are startups out there that are not true AI, but if you're a legitimate AI player, maybe you've been working at Google for a few years in their AI team, and now you're doing something novel for the healthcare space or whatever it is, you're probably going to raise money pretty quickly, and possibly a lot of money, and possibly at a very big valuation. Right? We had one of our customers. I'll give a shout out, Pryon, Pryon, just raised $100 million round. You know, Pretty exciting stuff. So that market is hot, obviously.
And as I understand, you bet on a horse you know as well. Like if there's a successful founder and they're looking to raise again, uh, I don't know if you can put numbers on it, but there's a higher probability that they raise money, and people are looking to attract that founder because of the doors that they could open. Whereas for investors, you're also looking for new opportunity, right? So how do you
Yeah.
weigh betting on the unknown horse versus betting on the known horse, if you will?
Yeah, absolutely. I literally 15 minutes ago gave a talk at an accelerator in Chicago called 1871, where we were talking about building a pitch deck. And part of this was like, which story do you want to tell? There's a dozen or so different story archetypes you can choose from. One of them is the dream team. Dream team is often defined as people who have already had an exit or maybe even two under their belt. And to the investors, they don't even necessarily, I mean, they do care, but they what you're building or what you're doing is almost secondary to the fact that you've had a track record. Investors love that, right? They're betting that you've done it once, you can do it again, you've learned the ropes, you've got the connections. If you don't have that, I mean, there are various other things. Do you have traction? Do you have a really big kind of crystal ball vision that's very sexy and exciting? You know, there's different ways to kind of package your story if you don't have the proven jockey. Um, but yeah, proven jockey is great, right? You're going to get funded unless you've done something bad.
What advice would you give to a startup like approaching investment for the first time if they want to raise capital? Should they try to raise as much as possible, or should they try to raise as little as possible?
Good question. So, yes and yes.
Okay.
Basically, especially first time founders, right? You're not sure what the market appetite for your business is. So it can be troublesome or disheartening if you go out trying to raise a lot of money and then, you know, you're only getting 20% of that. Now, so what I would probably recommend is figuring out, like literally getting into your Excel file, Google Sheets, and figuring out, okay, we've got to hire this many engineers, this many salespeople, we've got to spend this much money on other things. This is how much I need. I need a minimum of 1.5 million to kind of get to the next level. Maybe you round that up to 2 million, give yourself a little cushion, and you go out and start to raise that. So kind of your minimal raise. Now, if the market appetite for what you're pitching is hot, is good, there's no real harm in raising that amount. I use Founders Street as an example. We went out starting to raise just 500K. I wanted to get some angel investors involved. I started talking to investors, and we found a VC that was interested, and they're like, well, we want to put in 500, but we want you to raise 1 million, right? So sometimes this can just organically happen where the amount you're raising will grow. Um, and then, you know, just to make this equation even slightly more complicated, it depends on the context of the competition too, right? If you're in a market where AI is a good example, where you've got all these companies that are raising big rounds, can you build a meaningful LLM AI company raising $500,000? No, you can't, right? So you might have to raise a lot of money to kind of be competitive with other players in the market.
And interestingly, I imagine that the amount you're looking to raise is actually a signal to people who know the industry whether or not you know what you're talking about.
Yeah, yeah, I'd say so. I mean, yes, absolutely, right. A funny kind of counterintuitive thing about raising capital. Sometimes startups will come to me and say, "Hey, I'm only raising 150K, or I'm only raising a little bit." And I say, you know, sometimes it's harder to raise a small amount than a larger amount because A, investors are going to think you don't know what you're doing if you're just raising that much for your type of business. And B, you know, investors also want to see that, hey, you're going to have plenty of cushion in your, or you know, war chest to be able to probably make a few mistakes and still survive. Where if you're just raising a little bit of money, they're like,
Yeah,
this guy's going to run out of money, and my $200,000 doesn't sound like that much, is going to be gone in 6 months. So I'd rather have someone that's raising $1 million. You know.
right. Very rare that someone would have $1 million of dry powder and just be looking to raise $2,500.
Yeah. So you got to, and this is an art and a science, probably more art than science in
Okay.
many ways.
Yeah.
So yeah.
And you are an artist. What made you think that I'm going to start my own company? What holes were you seeing in the market?
So I was helping startups. I was kind of a fractional CFO, helping startups prepare for raising. So if you had a startup, Lovejoy Inc., you would come to me. I would probably build you a pitch deck, probably build you a financial model showing how much you need to raise, help coach you through that. And then I would go identify, investors, and I'd build you a spreadsheet of investors and a way to track all these investor discussions. And that's fine. It worked fine. We had a lot of good clients that raised money, but the spreadsheet gets really messy really quickly. And, this is around the time when Mark Andreessen kind of said his famous, like, software is eating
Right.
the world, where all these industries are going to be affected by software. You could say AI is eating the world now, um, but that was like, there should be tools for raising capital. There really aren't anything out there. I mean, there were some things that were serving the large investment banks, but wasn't very much for startups. And so that was the genesis of the idea. Like, let's build a CRM to replace the spreadsheet, and then let's expand on top of that with all the other tools we built.
And you've been in this space for about 7 years, if I recall correctly, with Founder Suite. Is that correct?
Yeah, that's right. We launched our product about 2016. So yeah, even more. Yeah.
And is there much competition, or are you well ahead of any competition with Founder Suite?
Yes and yes. Um,
Okay.
for first few years, there really wasn't much competition, and in the last 2 or 3 years, we've really seen a lot of companies come out and spec some very almost direct clones, or very, really, they're copying our entire product suite. Like, come on, guys, come up with a few original ideas. I get it, but it's competitive. I'd say we're still pretty well ahead of them. But yeah, it's getting a little more crowded, and kind of excited though. We just released, like, Founder Suite 2.0, a
Hmm.
full ground up rebuild just a couple weeks ago. So that's our new platform, which we'll be building on and hopefully extending our lead uh,
Okay.
in front of these guys.
Well, a lot of it has to do with the team. I'm sure you can't clone your experience, 20 years or so in this space, actually quarter of a century, it sounds like, if not more. Sorry to remind you, but I'm sure it's been a
Yeah,
fun adventure. Um, I imagine a lot of it has to do with relationships. Now, you probably don't have a relationship with every single investor in your database, but in your CRM. But can you talk a little bit about how you build your CRM? Like, is it through leads, or people apply? Like, what is the process like from an investor to get on your platform?
they don't apply. We are building the database of investors, which sits underneath the CRM. So you have your CRM sitting on top of this database of investors, and we're doing it. We have a data team, about a dozen people, doing primary research. A couple of them doing, building some pretty interesting list of investors, and then the rest of the team will supplement that list, enrich the data using a whole bunch of different tools. So investors are not, I mean, we do get investors saying, hey, I found you guys, our portfolio company is using you. I see that we're not in your database. And so sometimes we'll add them on request. But in general, we're out there scouting, doing some other stuff to or dragnet fishing. That's a bad metaphor,
Okay.
but kind of getting them into our database.
Right, right. Okay. So what then would you say differentiates Founder Suite, aside from, it sounds like, perhaps being first or one of the first to do this?
So a few things. I mean, so we have several tools. We have a database of investors, a CRM, pitch deck hosting, investor updates, email tools, virtual data room, and then community and documents and things like that.
Hmm.
For pretty much all of those tools, let's just take one at a time.
Yeah.
CRM. I mean, there's got to be 50 other CRMs out there. Now, only two or so maybe have a fundraising focus. The rest are sales focus, right? So a lot of it's kind of product nuances where, we've taken our experience in helping companies raise capital and turn that into a very purpose built CRM for raising capital.
Mhm.
But the other tools, database of investors, there are half a dozen other players out there that just do a database of investors, right? Um, PitchBook and Preqin and CB Insights, a bunch of guys, bigger fish that have investor databases. Well, they don't have all the other tools we have. So there's competitors for every individual tool, but no one's really tied them all together into a suite like we have. I think that's
I see.
one of our biggest advantages. Yeah.
And it's interesting you have Founder Stack and Founder Suite. So it looks like you're approaching it from both sides and getting a lot of relationship building and data flowing both ways. How much does personal brand come into this as well? Because I attended one of your webinars. Seems like you enjoy it. People enjoy it in the audience. I imagine you've done quite a few of those. But there's an element of personal branding, and people come to Founder Suite perhaps because they know you, they trust you, they see you. And can you talk a little bit about that dynamic?
It's an interesting question. I don't think about it like that, but I think there's probably something there. I mean, I think you're probably hitting on something. Um, I just love working with startups and I love talking about raising capital. And literally, I could do it all day long, every day. And I have been doing that for years. So to me, it's easy and
Okay.
not work and kind of fun. But
Yeah.
sure, I'm sure that translates into, I mean, like I said, I just gave a talk right before this one at an accelerator in Chicago called 1871. Lots of startups there. I love that. I love talking to, there were 20 some people on the call and we're talking about pitch deck stories and stuff like that. And I love it. That's fun. Now, of course, there's always a tie in to Founder Suite and our products, but it's hopefully not too much of a hard sell. So, yeah, I don't know. It's a good question. I really haven't thought of it like that, but or it probably could be a little bit more deliberate in that, Yeah, it's a good question.
Do you think Silicon Valley will ever go the way of Detroit, where it was this bustling boom town, and then all of a sudden things changed? And if so, what do you think those factors might be?
Yeah, that's a big question. I've been out here. I'm in San Francisco right now. I live right across the bridge now, but I still come into the city and work here. We're in the Salesforce Tower. It's this big shining beacon that's taller than everything else around it. I've been in here 25 years, and like I said, I've seen those booms and busts, and every bust cycle, everyone's predicting the death of San Francisco, death of Silicon Valley and or San Francisco, right? But then something happens, and it turns it back around, right? And I think we're seeing, and San Francisco has some rough edges to it that weren't there before. Everyone's familiar with homeless camps and things like that, and we just learned that our Macy's store on Union Square, flagship stores, they're going to close it. I mean, there's some signals that things are in decline. But then when that happens, you've also got this AI boom happening, and San Francisco is the heart of that, right? It is literally where most of the top AI startups are being formed, and the talent is coming here. So frankly, I just think there's some magic in the water here that keeps it reinventing itself over and over again. And seen it two or three times already. And
Oh,
yeah, I guess I'm an optimist and bullish long term on this place. And, I'm not going to turn this into a political thing, but I think you're seeing even startup founders here, some well known people like Gary Tan of Y Combinator, who are kind of making a political push to remove some officials who are not taking a hard enough stance on some of the city's problems. And, so I think there's a long term, I'm bullish, I guess is the short answer there. Yeah.
okay. That's good to hear. I love this city. It's a beautiful place, and that's nice to hear. So going back to a founder, someone that might be approaching the Founder Suite platform, what types of investors are on there, and what are some of the considerations a founder might have in choosing which type of funding they're looking for?
Yeah, sure. So we've got about 216,000 investors in there, adding more all the time. And we've got them tagged by type of investors. So we have roughly maybe 150,000 of those are angels, high net worth individuals. And then the rest, 66,000 or so, are venture firms, private equity firms, family offices, corporate VC, meaning strategic VC. A lot of larger companies will have a VC arm. And then also on the funding stack side, we've got foundations, endowments, trusts, fund of funds, kind of all these other LP type of investors, right? Now, to the second part of your question, so that's, typically you come in and you search maybe by your industry, um, and by type of investor. So if you're in the healthcare space, you would triangulate healthcare investors who are angels, things like that. But now there are, kind of to the second part of your question, there are lots of other sources out there, right? Angel and VC is sort of the bread and butter for many startups raising capital, but um, corporate VC, strategic ventures, which I mentioned a second ago, could be interesting depending on what you're doing. If it would benefit you and give you a leg up over competitors to take some capital from a large firm in the space who maybe can help with product or distribution, that's another angle to look at. Venture debt, if you're a little bit later stage and you don't want to give up more equity, looking at venture debt could be a good option for you. There's revenue-based financing, which has really kind of blown up in the last few years, where it's kind of like debt. I mean, it's a debt instrument, but it's a loan that is then paid out of your revenue, basically, short version of that. And that's a way, if you've got predictable revenue, maybe you're a SaaS business, a subscription business, where your revenues are pretty predictable because you have people paying you every month, then doing revenue-based financing could be a nice way to grow your business without selling shares, giving up equity. So a lot of options out there. And of course, crowdfunding,
Right.
that's its own separate animal. But for many startups, maybe especially consumer goods, things like that can be pretty viable.
And I see you have pitch deck hosting on there. Are there like tutorials or things to help a startup founder know some of the P's and Q's of putting together a pitch deck?
We have a couple templates in our documents collection for the pitch deck. Frankly, probably to answer your question, not enough. There's not enough stuff to really help founders build the pitch deck. We're starting to see some AI pitch deck builders come out there. We don't have one at the moment, but that's starting to kind of come out. Whether they're going to create a good pitch deck is another question altogether. It might, help you get going. Um,
Right.
yeah, I mean, like, I'll paraphrase this talk I just gave at 1871, which is all about building your pitch deck. And, the summaries there, if I had to boil it down to just a few things, it's like, you got to tell a good story. It's got to be a good story with an actual story arc that has an emotional connection to the investor. It has maybe a financial, logical connection, um, and that's memorable, because these guys and gals who are writing the checks are seeing dozens, sometimes hundreds of pitches per week. So your story, your pitch has to be somewhat memorable and tell that nice, clear, succinct, coherent, compelling story. Um, and a lot of it's a pretty personal thing to build a pitch deck, right? You've got to tell your story. Why are you doing what you're doing?
Do you think it's possible to cheat on a pitch deck? Talking to investors, is there a formula that you can get the inside scoop? Like, this investor cares about this or whatever. Is there like a game to it, or can investors pretty much see through that? Like, I'm just curious.
I don't know if it'd be called cheating. One of the also tactics that I just gave is how to start writing your pitch deck. And the three ways I talked about were: one, take pieces of paper, literally like hand draw some slides, then turn those into PowerPoints or keynotes later. Number two was to just start with titles in a PowerPoint, just kind of draft little, like, almost chapter titles, and then fill in the details. Number three was find a good pitch deck out there
Hmm.
and reuse it for your own, like kind of modify it to your own. So that's the closest I can kind of say is cheating. Now,
Okay.
I don't think investors are going to going to say, oh, this deck looks like too much like the Airbnb deck. You clearly copied their deck. I don't think that's a thing. I mean, obviously, if you were truly copying it, that's an issue. But um, I think they're probably seen many, many, many similar decks that all
Okay.
kind of look and feel, have that Sequoia outline template. Um, so yeah, I don't think so. Not really.
As long as you can answer the questions. I remember, I don't know if it was an article I read or hearing a podcast or something about Elon Musk talking about how he hires people. Like he'll ask follow-up questions. He can tell whether or not they actually know what they're talking about by how they answer. Like if they've been there,
Mm.
they would know how to answer this question. So I imagine there's a little bit of that as well.
I think I feel like we've published some stuff like two, 200 questions of investors going to ask you, right? Kind of a cheat sheet for knowing what the likely questions are. So sure,
Okay.
being able to study those and practice those, that's great. That's not cheating. That's just being prepared.
Right. Well, it gets you to think about certain things you might not have thought about, like might have glossed over. Yeah. So that's really helpful as well. And
Yeah.
how many users or members do you have on Founder Suite? You mentioned 216,000 investors. What about the borrowers?
Yeah. So those are the number of investors in our database. Total within Founder Suite, we've had about 87,000 startups. That's been over the last several years. At any given time, we've got a few thousand actively fundraising, and there's a cycle to that, right? I mean, they might come on for 2 to 6 months of heavy use, and then kind of slow down in between rounds, things like that.
And are you looking primarily in the United States or North America, or are you also looking in emerging markets?
Pretty global. Our biggest categories of users, obviously, U.S., Canada, UK, all the English speaking
Okay.
worlds, right? The
Yeah.
Australia, Canada, UK, but then very strong in Germany, somewhat in France, and getting some traction in the Middle East region as well. We have some teammates there, and there's actually a decent amount of startup activity happening in the MENA region
Okay.
as well. Asia's a bit mixed. China's not really a place we find many customers, even though there's a lot of entrepreneurial activity in China.
Mhm.
It's just not. I don't know if it's language or what, but we don't really have many customers there. We've got a handful of Japanese and
Okay.
Singapore, customers. Yeah,
How about like India or Vietnam?
India, yes, quite a few in India. And we have Indian customers and Indian employees, and they're great. India is a challenging market because the price sensitivity is quite high there. In other words, to put it bluntly, they don't like to pay very much for software tools, and so we haven't really cracked that market. I mean, I guess you could argue we need to come out with a kind of streamlined, less expensive, minimal version of our product to crack the Indian market. But we've actually gone the other way. We've just recently raised prices a bit from 69 to 99 a month, so it's
Okay.
a bit much for Indian market.
I see. Yeah, I think like LinkedIn Premium, for example, has a different price depending on where you are in the world. And
Oh,
I
interesting.
I don't know enough to say this definitively, but I suspect it's the same product. I don't know if they gate certain things depending on where you are on the price scale, but that was interesting too. I'm just curious about these dynamics with a global. We're so interconnected these days, so it's like, how do we leverage that arbitrage, and do we kind of leverage that arbitrage? So
That would be interesting to know, like what a person in India pays for the same, LinkedIn Navigator or whatever the premium product is. Like how much we could use that as our proxy, maybe. Yeah,
maybe,
it's good.
yeah, and make sure people aren't using VPNs. I guess if that's like,
Right, I know. There's always those unintended side effects or consequences sometimes
right,
of
that
doing that,
drives
right?
innovation.
Yeah.
So what are your goals? Yeah, I mean, you've been in this a long time. Looks like you've been reasonably successful. What are you? What keeps your fire burning, and what are you looking for in 5 years?
Sure. I like what we're doing. I just had a call yesterday with our VC, and I got a similar question, and I didn't have a crystal clear answer, which is not a good thing, right? Your investors asking, what are your long term goals? Where's the exit? I mean, frankly, the truthful answer is we're just going to keep building out good products. There's a lot of
Okay.
other products to build around this fundraising space that people need, and our to your earlier question, what's unique about us is we've got a suite of tools for raising capital. That suite, there's definitely room for expansion in some other areas. Um, so continuing to build out that product platform. And then, like I said, we've got Founder Suite for startups and Funding Stack for VCs. And there's a lot we can do in this new market of serving emerging manager VCs and funding advisors. They have some specific use cases they want, tracking their portfolio companies and things like that. So plenty of things to build. So I think the long-term vision is just to keep building stuff and grow into kind of the place to go when you're raising money.
Okay. And if we could pull on your vast experience a bit, what are some common pitfalls that a startup founder should be aware of when it comes to capital in the, let's say, 1 to 3 year time range?
Yeah, common pitfalls I see. Probably the biggest is going out raising capital with a bad pitch deck. That sounds simple, but you would not believe how many customers and just people in the startup world I see that are raising money, and I look at their deck. I'm like, this is just terrible. Like and terrible is maybe a strong word because I have a high bar of what I expect to see. But you know, cluttered slides, convoluted storytelling in the deck, too much. Usually, if I had to boil it down, it's too much information in the deck. It's not this clear, concise, succinct, really compelling, crisp story. So that's a
I
common
see.
flaw. And the reason that is a true flaw, like, does my deck really have to be that good? Yes, it really has to be that good because these investors are getting introed
Hundreds, thousands.
hundreds. I mean, you just have no idea the flood of the fire hose of pitch decks coming out then. So yours has to be, this is really amazing. That's one. The other
Yeah.
thing I'd say is, founders do a poor job of targeting investors. I often give this talk where I talk about fundraising as a sales process, and good salespeople will qualify their leads, right? Step one is building a list of leads or prospects, and then step two is qualifying them and making sure everyone on this list, everyone in your CRM, actually is looking. They invest in your space, in your industry, in your stage, in your geographic location. Ideally, they're actively investing. They have fresh capital, right? I mean, kind of qualifying and making sure the people you're trying to reach out to and have calls and meetings with are looking for your type of deal. That's the best
Right.
scenario when you've identified 100 people, 200 funds that are looking for your type of deal. Then it becomes very organic and natural. But I see founders all the time like, "Hey, how can I download? I see you have 12,000 investors in SaaS, software as a service. How can I download all of them so I can email all 12,000?" Like, you can't. We won't let you do that because that's a terrible way to fundraise because maybe 2,000 of the 12,000 are relevant for you, right? You've got to put in some time and identify the right people. So that's another one. I'd say just a third one to throw on top is if you're gonna get out there and raise money, you got to kind of go in all in on it, right? You can't dabble, you can't part-time fundraise. You kind of have to
Mm,
go all in and frankly treat it like a full-time job. And then of course the people are like, but I already have a full-time job, I'm founder of this startup. Well, you've got to also make that work and
right.
keep the lights on and fires burning even while you're fundraising 12 hours a day. Sorry to tell you that, but that's what it takes in many
The
cases.
life of
So
an
yeah.
entrepreneur. Yeah.
Yeah,
What are some,
I'm only 24 years old. I just look much older because I've been
right,
fundraising.
right.
Yeah.
That's what I suspected. What are some of like your favorite companies that you see that you feel was like a good match with the funding they received and what they did with it?
Yeah, I mean, it's a good question. It's I'll use like one of our customers I might have mentioned, Prion. They're in AI space. They just raised $100 million Series B, and trying to remember exactly who their leads were. Um, but they spent the time getting to know the right investors.
Mm,
Let's see, led by Thomas Tull, and they had a couple strategics in there too. And I think it really sets them up. Bootstrap Labs, Brayer Capital, that's Jim Brayer's firm. He used to be at Excel. So
okay.
some pretty high profile names. Um, that is always great, right? If you're trying to hire, you can say, "Oh yeah, we're backed by some of these well-known Steve Cases, Rise of the Rest Fund, things like that.
Mm,
That's great for reference and recruiting. Frankly, it just kind of depends on who's the right fit for you. Like I like startups that find brand name investors, but then a lot of times there's the newer funds that don't have as long a track record that can be a better fit because they're hungry and they're looking to build their brand by having some successful startups, so they're going to hustle harder for you, right? So it's
hmm
kind of
Right.
a personal question or personal decision that's hard to
Okay.
answer. Yeah, a
Yeah,
little
fair
bit.
enough. Yeah, thank you. Well, I think that those are all the questions for me. And thank you so much for sharing a little bit about your experience and your company, foundersuite.com. And you look pretty active on LinkedIn. Can people follow you on
Yep,
LinkedIn? Okay.
they can, or just happy to connect. Just maybe mention you heard about me on this show. That'd be great.
Okay.
That way I to get a lot of LinkedIn connections. But if we have some connection, that's great.
Sure.
Absolutely, yeah. We post a lot of stuff on LinkedIn. A lot of it's all fundraising content, investor lists, and things like that. So some good stuff we post there. And I'll give one little plug. We also have
Yep.
a pretty good podcast of our own called How I Raised It, which is just interviews with founders on how they raised their rounds.
Excellent.
So it can be pretty inspiring sometimes to hear how people have done it and overcome the challenges of fundraising. So there's my plug.
Great. I'll put all that in the show notes. And thank you so much for your time, Nathan. I know you're a busy man, but that was enlightening.
Thank you very much, David. I appreciate it. Appreciate you having me.